Hi there. Do you know your vehicle now faces higher UK road tax bills in 2026? We will explain it.
Hello there. A huge financial change is on the horizon for UK drivers, and honestly, it could cost you hundreds, maybe even thousands of pounds every single year. So, we've teamed up with the expert tax advisors at My Tax Accountant to break down a really critical update on car tax that's coming soon. Right, let's get straight into what you need to know.
£790. Just let that sink in for a moment, because from April 2026, that could very well be the new annual road tax for some of Britain's most popular family cars from the last couple of decades. It's a figure that's going to make a lot of people ask a very, very tough question. Can I still afford to keep my car on the road?
And that's really the heart of it, isn't it? Could your car be one of them? You know, these changes are much more widespread than you might think. We're not just talking about flashy supercars here. We're talking about the everyday cars that so many of us have relied on for years and years.
So, to help you get your head around all of this, here's what we're going to cover. First, we'll unpack this 2026 tax shock and pinpoint exactly which cars are going to be most affected. Then, we'll get into some new rules that are even going to hit electric cars before looking at a really important exemption that could save you some cash. And finally, and this is the crucial bit, we'll talk about your options before that deadline arrives.
Okay, so let's break it down. Vehicle Excise Duty, or VED, what we all just call road tax, right, is about to get one of its biggest shakeups in a long time. Starting in April 2026, the government is bringing in a whole new set of rates. It looks like they're trying to do two things: make more money and make the system a bit more standard. But the knock-on effect is a financial hit for pretty much every driver out there, whether you've got a 20-year-old petrol car or a brand new electric one.
Now, this is the part that catches a lot of people out. The biggest financial hit is aimed at a very specific window of cars, those that were first registered between March 2001 and April 2017. If your car is from that time, you really need to pay close attention.
To really get why this is happening, you've got to think of UK car tax in three different eras. Before 2001, it was dead simple: bigger engine, more tax. After 2017, it's mostly just a standard flat rate. But that period in the middle, from 2001 to 2017, well, that's the danger zone. Back then, your tax was based purely on your car's CO2 emissions. And now, the government is hiking up the rates for cars from that era with higher emissions, and they're hiking them up dramatically.
And what's really wild when you look at this table is just the sheer scale of the jump. I mean, look at bands L and M. For cars pumping out over 226 grams of CO2 per kilometer, the tax is leaping to £760. And if it's over 255 grams, you're hit with that staggering 790 quid. This isn't a small increase to keep up with inflation. This is a huge, punitive rise that's pretty clearly designed to make owning these cars a lot more expensive.
And this list just proves that we aren't talking about supercars. I mean, are these really luxury vehicles? You've got a performance hatchback like the Golf R32, a family workhorse like the Mondeo V6, a practical 7-seater like the Zafira VXR. All of them are now facing annual bills of over £700. All of a sudden, the total cost of just owning these perfectly good, useful cars is about to go through the roof?
You know, there's a fascinating and kind of ironic twist to all this. A petition against these changes actually points out a pretty big flaw in the logic. Its founder, Heitor Mazzati, says that making a brand new car creates a massive amount of CO2. So a lot of the time, the greener option is to keep a well-maintained older car running. This policy, which is supposed to be about emissions, could end up forcing thousands of perfectly good cars to be scrapped, which would create a whole new environmental problem.
But hang on. It's not just older cars that are feeling the pinch. The government is also making some pretty big changes for a completely different group of drivers. Stay with me on this, because this next point affects anyone who owns or is even just thinking about buying an electric vehicle. The era of tax-free electric motoring is, well, it's officially over. For years, having zero road tax was a massive selling point for going electric. Well, that's gone. From April 2026, most new and existing EVs will have to pay a new standard rate of £200 a year. And on top of that, you know that luxury car supplement, that extra charge for cars with a list price over 50 grand? Yep, that's going to apply to EVs now too. And if you look even further ahead, there's talk of a pay-per-mile charge. The free ride has definitely ended.
So let's put that in simple terms. If you own an electric car that had a list price of over £50,000 when it was new, your annual road tax from 2026 is going to be £625.
That's the 200 quid standard rate, plus the 425 quid luxury top-up. That is a brand new and pretty significant running cost that a lot of EV owners probably haven't factored into their budgets. Okay, so after all that, let's be honest, pretty bleak news. Is there any good news? Is there a way out? Well, for a small number of car owners, yes, there is. There's one key way to become legally exempt from paying VED at all, but it all comes down to how old your car is. Let's talk about the historic vehicle rule.
The rule is actually beautifully simple. Once a car hits its 40th birthday, it can be reclassified as a historic vehicle, which makes it totally exempt from VED. It's a rolling date, which is neat. So, from the 1st of April 2026, any vehicle built before the 1st of January 1986 will be eligible. It's a fantastic benefit, but of course it only really helps if you own a genuine classic.
So if your car qualifies, the process is pretty straightforward, but it is a bit old-fashioned. You can't do it online. You'll need your V5C logbook and your MOT details, and then you have to pop down to a post office that handles vehicle tax. They'll sort out the paperwork, and the DVLA will send you back an updated logbook with that magic little word on it, historic.
Right, for everyone else whose car isn't quite a classic yet, the big question is, what on earth do you do now? You'll want to hear this part because timing is everything. Acting before April 2026 could be absolutely crucial to protecting your car's value.
This chart shows what the experts are predicting for the used car market. As soon as these new tax rates hit, it's expected that demand for these high tax models is just going to collapse. I mean, think about it. If you're a buyer and you've got a choice between two very similar cars, but one has a £790 tax bill and the other has one for 35 quid, which one are you going to pick? It's a no-brainer. And this is likely to cause the value of these high tax cars to just fall off a cliff.
And look, this isn't just a theory. People in the industry are already bracing for it. Wayne Lamport, who's a classic car dealer, puts it perfectly. He says it won't take many years for the tax cost alone to equal the entire value of the car. He's even warning that some of these popular models are becoming, and this is his phrase, virtually unsellable. That's real-world proof of the financial trap that's just around the corner.
Okay, here is my top tip for you today. As soon as you've finished here, go and find your car's V5C logbook. You're looking for two little bits of information, the date of first registration and the CO2 emissions figure. Those two details alone are your key. They will tell you exactly which tax system your car is in and what your costs are likely to be come April 2026.
So, as we've seen, these are really complicated changes, and they have serious financial consequences. Whether you're looking at a massive tax hike or a sudden drop in your car's value, the stakes are pretty high. Trying to get through this period without understanding exactly where you stand could be a very, very expensive mistake.
Which brings us to the crucial question. What is the right move for you? Do you sell your car now while it's still got some value? Do you hang on to a car you love and just find a way to absorb those much higher running costs? Or do you start planning your finances right now to manage the change? Honestly, this is the dilemma facing thousands of drivers across the country. The best thing to do really does depend on your personal situation. So for tailored advice, the experts at My Tax Accountant can help you figure out your specific position and make the best financial choice for you. You can get in touch with them using the details on your screen. And just a quick disclaimer, please do remember that this information is for general guidance only, and it's based on the rules as we understand them in February 2026. Tax laws can change, and they often do. So you shouldn't rely on this alone for your financial decisions. It's always best to consult a professional advisor.
So we'll leave you with one last thing to think about. When you add up the new tax, the insurance, the fuel, and that potential drop in its resale value, how much is your car really going to cost you after April 2026? For more insights like this, please do subscribe to the My Tax Accountant channel on YouTube. Thank you for your time.